Hey guys, good evening. This is Simon with Trade and Perform Coaching, doing the trade review for, it was Fed Wednesday, July 26, 2017. So before we get started, just real quick, I have to post the disclaimer up there. If you want to pause it here and read through this, that's fine. Basically says that past performance is not indicative of future results. This is for educational purposes only, and I'm not soliciting you to buy or sell anything, including equities, futures, options, and currency trading. Realize you can lose a lot of money trading futures if you do not have a plan and if you do not respect your risk control, right? It's not easy, and that's why I'm here to help people. And the goal of this is quite simple. So I had an interesting conversation with one of the gentlemen in the room, and I forget, sometimes you overcomplicate it as a coach, or you try not to overcomplicate it, but inevitably you do, trying to teach people more and more. So the idea behind the zones, there's two very basic concepts here, and I want to show those. The basic concepts here are the white zones and the yellow zones, right? Everything else on the screen that you see is for decorative purposes only. They're either visual locations that have lower odds, or they're for more advanced traders. The idea is to bring on the euro, the bond, crude oil, and the NASDAQ, bring clear, concise levels where you can make clear, definitive decisions, right? And introduce a risk plan where you can manage your risk, have a reasonable expectation that you're going to find responsive buyers or responsive sellers from that location, and proceed and trade. So, and the idea behind that is, again, to take the focus off of any one particular trade and get to a series of 100 trades in a row where you have high odds and you can let the odds work in your favor. So, again, a lot of this was derived from trying to teach and figure out, well, how would I teach my own daughter how to trade? And in working with her, I can explain to her why these locations are key, right? But more importantly, when she's looking at the screen, she's immediately, this is where I want to place my risk. This is where I want to place my stop. And now I can start managing the trade back and forth, right? So these zones change based on rotation size and all kinds of other formulas that are going in. But the idea is to give someone who's relatively new to trading, or someone who's not been able to stack days consistently and goes through boom-bust periods, get them to consistency. So ES was a little confusing to start off the date. So let's start with ES here. So ES opened, and we opened just above. And if you'll ignore this blue line here, just pay attention to the zone, right? And I'm going to try and spread this out. We opened right here at 24.78 1/4, and we pushed down from there into the white zone. Now, my trade is to take location in the white zone, and when it hits there, it's my highest odds trade. The wins in the white zone have lately been above 90%. It's not always the case. Nothing's 100%. Sometimes they float down to 75 or 80%. Sometimes they float very, very high. Right now they're floating very, very high in terms of their win rate, right? So on the open, the market pretty much immediately dives into the white zone, and almost everyone in the room who took the trade from the white zone, and there's one last note. This is my trade plan. This is important. This is my trade plan. I'm trying to teach my trade plan to others so they can adapt it, make it their own, and then make their own trading decisions, right? So this is how I traded it. I was long at approximately 77 1/4 and 77, and that was almost an immediate nosedive in there. Within 2 or 3 minutes of opening, we were down at that 77 1/4, and I added a little bit right at the back of the white zone. And then I want to talk about this for a second, right? Because this is always challenging. People are like, well, it's a gap up, but it didn't gap out of range, and there's an open gap here, and weren't you scared when you took the trade that it was going to come to the gap and stop you out? And the answer to that question is actually, yeah, I was scared that I was going to take the trade right here. My stop is 2 points. So I want to show you where my stop was sitting. My stop was sitting 2 points behind the back of that zone. So 76 brought my stop to 74. Okay, that was my risk on this trade. And my goal on the trade was to get the market to move to 80 and 82. Those were my upside targets. So I had a 1-to-1 risk reward on part of the trade, a little bit less on the other part of the trade, but that's what I'm able to consistently get, is the 2 and the 4 points out of that white zone, right? So the question always comes, I love it on Twitter when people say, well, no fear, I follow my process. I don't question it. Well, I do have fear. I trade leveraged futures. You're crazy if you don't have a little bit of fear, right? You have to respect the market at least. So yeah, I'm taking the trade in the first 5 minutes and I have some fear. But I back that fear up against my stats, right? And against my repeated days. If you'll look, so I'll show you all this. When you look at, these are days and days and days of zones that have performed very, very well all the way through here, right? It's not just a little bit of history, it's a ton of history. And I have active data. I know, for example, last month, in the month of June, that we had 89 points on 2 contracts, 89 points out of the white zones, not even counting the yellow zones, right? I know the month before on 2 contracts we had 24 points. So I don't remember what, that's March. I don't remember April, but that's May and June. And then we're in July, and I believe we're at 30 points for July right now, maybe a little bit more. So I have a history. I know that I want to take my trades so think about that. I know my history. I want to take my trades sequentially, right? And I want to be able to counter any feelings of fear that I have with facts. So I want to say that again. I want to counter fear with facts, right? And the fact is, we opened above the white zone. The white zone works the majority of the time, even out of the gate. I took the trade, and my target was 80 and 82. Well, here's what happened. We opened up. We made a dive. It sure looked like I was going to get stopped, right? If you'll imagine, at one point, this bar was solid red. It ended up green. Well, it ended up reversing on this bar, right? So you got to remember, I'm in at an average of just under 77 when all is said and done. We push up, right, towards 78, right? And finally, we reach this, but we don't quite make it to 78. I unload a few contracts into the 78 because we're approaching the opening print, right? We pull back, I load in a little bit more, and finally we make up to 78. And I don't remember if that's the exact sequence, but basically what I want to see out of the white zone, and I'm going to give you an example of that. This is NQ, so it's the NASDAQ 100, and I'm doing it for visual effects. How I wanted this to work was I wanted to open, dip into the white zone, and shoot out. That's what I was looking to happen, and that's exactly what did happen in the NASDAQ 100, right? So if you'll look in the NASDAQ 100, this trade, when we pushed in here, the top of the zone is 59.44. Here's 59.54 right here, right? So in the time that it took to move 10 points, that's equivalent of $200 a contract, or that'd be equivalent to 4 ES points, right, which is my target. So in the time that NQ was able to achieve that move, ES was not able to achieve that move. And this is Fed day, and when we consolidate in any zone, I gave it a really long time, and I believe I finally hung it up after 45 minutes. 30 to 45 minutes, I was like, okay, we're done. And what I mean we're done is what I did was I had scaled enough so that I was profitable, and I put my stop 2 ticks behind the swing low right here at essentially at 75, and my trailers got stopped out. I did okay. It wasn't a phenomenal day, but I did get stopped out on the trailers, and let me tell you why I did that. It's very important, right? I know statistically that I'm very likely to be able to grab this 80 and 82 scales out of the off the top of the zone, right? So I had a conflict, and the conflict was fighting time versus target. And just early in the morning, when you're likely to get the most volatility and the best shot at getting a slingshot, after 45 minutes was just taking too long, I lightened up the trade and essentially walked out slightly profitable. I could have taken the whole trade out here, and many of the people in the room did. And the reason why a lot of people took that trade out in the room for profitable for 2 points was because they were just a little bit more patient than I was, and they took their trades at 76, 76.50 to 76 and a quarter. And so by the time they got to 78, 78 and a quarter, they already had 2 points. I was a little bit earlier. I was in up here at 77. I wasn't able to achieve the same P&L. I never got my target. And technically, right, if you look at this and you held through the Fed, this zone failed. It would have come back to this 74 and would have popped me out. As it was, that's not the case. I was pretty much out right on this bar right here. It took me out of my trailers, and I was out of most of my position as we were pushing up in here. So I want to make sure that everyone understands, and so they're clear, right? What I wanted to happen in ES is exactly what happened in NQ. early in the day, right, we opened up. Where are we? Here we go. We opened up. We pushed into the white zone, and we shot up for 10 points, right? Here we opened up, pushed down to the white zone, and just never made it out. It took well over an hour to even come close to achieving the target, but I was able to, I understood where I wanted to take risk. The zone arguably held its location, right? And had we come down to the next white zone, which would have been right here at 2470, I would have done the exact same trade again for a push back into the mid. And that's why I'm consistent day in, day out. Anyways, there wasn't much more to tell about ES during the day. I want to show how the zones work when it's difficult versus when it's just always popping, right? So an example of what it looks like when it pops out of the white zone, an example of when it kind of just struggles and you got to, at some point you got to go, it's taking too long and I've taken my trade off, but I try to give it as much time as it needs because it's summertime and it can take a while to make the push out. We just never got there, right? Let's jump over to, let's see if I have this. There it is. One second. That's not what I was looking for. Let's jump over to, back over here. Those were tomorrow's charts. Let's get today's euro, bond, and crude charts. So on crude, it was oil inventory days. Let's cover that really quick, right? Again, the idea is on this is to have a key location to trade from. So the white is the highest odds location. Yellow is the second highest odds location. The reason why a zone would go from white to yellow may be that the profile doesn't look quite right. Location may have been tested already once or twice, but still key location. This allows me to do a couple things, either back size down or give it less time, and I certainly only take the first punch in. And you can see overnight we traded sideways. Oil inventories came up, so this is why oil inventories are a beast if you don't know what you're doing. Oil inventories came up. We broke yesterday's high, which is what this purple line is. It's not a zone for me, right? And then you see we plunged. When I say plunged, we plunged. If you'll take a look at the size of this move, this is a move from approximately 48.90. Let's just call it 48.75 all the way back to 47.94. It's an 80 tick move, $800 a contract. So that's why I always hesitate when people are saying they're trading on oil inventory days. These, I call these crazy Ivan turns, can be really brutal. That being said, if you waited at your trade location, right, 47.94 to 47.74, look at the push. You got that. You got literally almost a 100 tick move, certainly a 90 tick move out of that location. That's $900 potential P&L from that contract. Now, does that mean that everyone took it? Well, of course not. There's multiple members in the room, and everyone, you know, some people have rules that say I don't trade on oil inventory days. Some people say I take my profits after 10 ticks. Some say after 20. Some say after 50. Everyone has different rules, right? My key concern is that I'm identifying key locations and providing it to the members so they know where they want to take risk and they have a good location to manage that risk. And they're not over-clicking, over-trading, and they have calm minds because they know where they want to trade, right? And that's exactly what I'd want to do for my daughter. So let's go and look at, and again, remember, these are all posted before the market. Here's the euro. Euro had quite the day today. So if you'll look, and this is a good example to go through when we're trading. This should be white, actually. Something's wrong with this chart. Hold on one second. Let me figure this out really quick. This should be a white zone. Oh, no, you know what? This should not be white. This should be green right here. There we go. I don't know why that top line went white, but nonetheless. So if you look, this is a green zone. So the green locations, I have marked this chart up and changed it. Is what has happened here, because these should not be, this should be, wow. You know what, let's hold off on the euro because I must have been walking someone through this chart earlier and I've changed the support resistance lines on it. But there is an important lesson to learn here before we move forward. On the reason why I give caution on Fed Day on any of the markets, right? See how this market was moving nice and calmly and you could have traded it quite easily. And then all of a sudden it gets really violent. Look at the size of this move. This is a move from 1.16 right, 1660, all the way up to 1.7735, right? And this yellow zone was legit. It pushed in here. I've messed up these zones in here, and I apologize about that. This is not how they looked overnight. Actually, let's go see. I can go look at the, actually, let's not waste everyone's time, so we keep it short. I messed this chart up. I've somehow manipulated it when I was reviewing it with someone and added lines. These weren't all zones. This was, and you can see we pushed up, and I know that we had a zone down here, and that we pushed in early in the day. And this was a green zone. This was not a trade location. Anyways, the point is the violence of the move, right? And then finally, let's cover the bonds. I don't think I messed up the bond chart at any point today, so let's go take a look at it. And there we go. I did not. So if you look at the bond, this is a green zone. So green zone is the lowest odds of the zone. It's still a valid zone. I don't trade the green zones. They don't have high enough odds for me. But I also need to know why the market's having an inflection point there if it chooses to respect it or it's low energy. So if you look, right, again, eyes towards helping my daughter learn. Push right down into the 152, 930 seconds to 530 seconds. We push one tick on the bid into the zone, and then look at the move that comes out. This is massive. I'm certainly not advocating that someone would hold through the Fed, or at least leave your trailers with moves to stop to break even, but you certainly got 5 to 10 ticks out of here. That's over $300 a contract at 10 ticks. That's a great trade. I know of one member in particular bought the calls out of this location and did quite well. So at any rate, that's all the markets. So I want to remind people of a couple things before I let everyone go, right? Number one, have a process, right? Whoever you're trading with or from or whoever's chart you're using, don't follow them blindly. Go in their room or talk with them. Learn why the zones are there. Observe. Do they work? Do they not work? Right? They should be posting those charts before the market opens, and you should have time to plan out your day. 2, have a loss plan, right? I don't care how good you are, you're going to experience stops as a trader. The key is not over trading during those periods, right? Knowing that the market's going to come to your location. I can show you literally hundreds of charts where it has not ever failed that even if one market doesn't work well that day, it tends to work well the following day. The market will come to you. You don't have to feel desperate to make up your losses. Respect your stop losses so your account can survive. Don't trade overly leveraged, right? Make sure you can survive and that you actually have a stat that'll let you get through 10 trades and then 100 trades with a few drawdowns in there, and a few drawdowns don't break you psychologically, financially, or in any other way, right? And lastly, right, be dedicated to, once you have a location and you've built a process, following that process. Don't chase the market around, right? If you see the market's doing something new, go in, find out what it's doing new, create a process around that new setup, and then execute once you're certain you're able to execute at a high level. Don't try to be perfect every day. Don't try to chase the market up because all of a sudden one market turns into a momentum market instead of a regression market. And that all falls under being true to yourself, being confident in who you are as a trader, right, and believing in your process. Anyways, my name is Simon. I'm with Trade and Perform Coaching. My job is to help traders move from boom-bust trading or losing trading to first break-even and then consistent profitability. Anyways, have a great night, everybody, and I will see members in the room in the morning. Anyone who would like to join, last note, really quick, you can email me. I'm going to post this up. tradenperform@gmail.com. You're welcome to ask for a 5-day trial into the room. Come in, take a look. I do what I say and I say what I do. Put up the charts ahead of time. We discuss in the morning in the mentor room how I'm going to approach my trade plan for the day. And then we talk about where the pitfalls are and where the opportunities are. And then I have daily commentary throughout the day from $95 a month. It's a deal. And tons of good feedback. So at any rate, tradeandperform@gmail.com. Have a great night, guys, and I will see you all in the morning.